Good afternoon and welcome to the Market Wrap for Tuesday, the 24th of February. And today we had a very similar day to yesterday because we started off on a positive note. At our best level, we're up by around 1/3%. But as the day went on, we started dropping off. And by the end of the session, we were completely flat, down by just around 4 points. Of course, yesterday we did see a bigger drop. We were down by around 0.6% in yesterday's session. But similar nonetheless, we ended at 9,022 points. Of course, investors are still digesting Trump's announcement over the weekend of 15% global tariffs after the Supreme Court overturned his Liberation Day tariffs, deeming them illegal. That's created a lot of uncertainty and also reignited safe haven demand, sending gold prices to a 3-week high overnight. Now, on those tariffs, they actually took effect at 4:01 p.m. Sydney time today at 10%, despite his further announcement of 15% tariffs. So it'll be 10% at first, applying to every country for a period of 150 days. Unless specifically exempt, but the administration is working on raising it to 15% in a separate order that Trump will need to sign, with no timeline for when that will occur. So that was today's development. But look, even though we did fall very slightly today, it was quite a modest decline, as you can see, down by just around 4 points, largely flat. So we still outperformed the US market, which fell by over 1% overnight. And we can't forget that we did hit that record high just late last week. Now, across the sectors, it was fairly mixed. We saw materials doing the heavy lifting, the sector up by around 1% to a record high today, supported in part by BHP, which actually hit a fresh all-time high today as well. Energy was another standout, lifting by around 1.7%, but losses across some of the other sectors today actually offset the improvements, with tech falling most amid ongoing AI disruption fears, meaning the sector has now fallen by 26% this year so far, and it was down by around 3.5% today. Now, energy giant Woodside reported a 24% drop in full-year profit amid softer commodity prices, which offset record production, but it still managed to beat analyst expectations. It also raised its dividend to 59 US cents per share, up 11% from 53 US per share at the same time last year, and it's hit its highest level since August 2024 in terms of its share price. Engineering group Monadelphous was up 15% earlier on in the day, hitting a record high, but it did fade slightly to end the day 6% higher after posting record half-year results thanks to a boom in new contracts. Viva Energy, which supplies about 30% of Australia's fuel, jumped after its full-year results showed an improvement over the second half, and lithium miners took off in afternoon trade after lithium prices began to rally from multi-month lows earlier this month. So Liontown actually finished in the top spot with a gain of around 8.7%, and Pilbara was in, or PLS Group, which it's called now, was in third place today with a gain of around 8%. On the losers list, though, Macquarie Group was quite a drag today. Its share price down by 3.5%, a little more than that, posting its worst day in over 3 months after its US peers dived on concerns about the potential impact of AI disruption on sectors, including financial services. So that so-called AI scare trade is just continuing to spread across different sectors and industries, as we have been seeing for the better part of a month or two now. Four-wheel drive accessory maker ARB slumped by 13%. It was today's worst performer on the ASX 200 after posting underwhelming results, including a 17% slump in half-year profit due to ongoing weakness in the core Australian aftermarket division. Shipbuilder Austal continues to experience big swings. It did second worst today, and online beauty retailer Adore Beauty had a terrible day, slumping by 28% as net profit tumbled by more than 2/3 over the past 6 months, with deep promotional activity and discounting eating into its margins. So and share price took quite a hit today. Now, the Aussie dollar has firmed just slightly from where it was this time yesterday. It's currently buying 70.6 US cents. It's firmer against the other currencies there as well, including the euro and the Japanese yen. Looking ahead from here, Aussie inflation data is going to be the big focus tomorrow. That'll drop at 11:30 a.m. Sydney time. Now, this is for the month of January. Now, the expectation is for headline inflation to ease slightly from 3.8% in December to 3.7% in January. The core number, which the RBA watches most closely, is expected to remain steady at 3.3% year on year. Both of those numbers clearly above the RBA's target range. So at this stage, there's roughly an 80% chance of a rate hike by May the 5th, which is not the next meeting, but the one after. So markets are largely pricing in that the RBA will actually sit on their hands at the next meeting, which is just in a couple of weeks' time. The other thing to keep note of is, of course, Aussie reporting season continuing. We just have a few days left, but we still have plenty of companies due to report. Tomorrow is going to be another big day. We have WiseTech, Woolies, Fortescue, Flight Centre, Domino's, and a whole bunch of other companies handing down those results. And we do talk about it, of course, in our daily podcast, the CommSec Market Update. So give that a listen wherever you get your podcasts. Have a nice night.